Hey, what's up, you guys? It's John here with Vision 360 Financials. So today we're going to be covering one of the best utility stocks to own from 2021 and beyond. All right, and that company is going to be NextEra Energy Incorporated, and that ticker symbol is NEE. A little bit about the company. So they are leading the way when it comes to the utility sector and energy sector in general. So they're actually the largest utility in the entire world right now, as of earnings and as of just sheer size. So they own multiple subsidiaries. So that includes the Florida Power and Light Company, which is the largest rate-regulated electric company in the United States, as measured by the retail electricity produced and sold, and it serves more than 5.6 million customer accounts, supporting more than 11 million residents across Florida with clean, reliable, and affordable electricity. It's a lot of people there, and that's just one of them. And then NextEra Energy also owns competitive clean energy business NextEra Energy Resources LLC, which together with its affiliated entities is the world's largest generator of renewable energy from wind and sun, and a world leader in battery storage. And through its subsidiaries, NextEra Energy generates clean, emissions-free electricity from 7 commercial nuclear power units in Florida, New Hampshire, and Wisconsin. And as we know, you guys, nuclear is only becoming a lot bigger because it's so power efficient. Literally, fun fact, it takes one water bottle, just a small water bottle of uranium, and that produces enough electricity to literally power the average American's life for their entire life, and then some. So literally one bottle of water has enough power producing capacity from nuclear to power more than one average American, which is insane considering how much power we use, right? So highly efficient compared to the hundreds and thousands of gallons it would take fossil fuels, etc. Not knocking them, I'm just saying it's a lot more efficient. And then so it's basically heavily in the emissions-free electricity, right? And it's also a Fortune 200 company, and it's included in the S&P 100 index. And it's been recognized also by third parties, right? And it has actually been ranked #1 in the electric and gas utilities industry on the Fortune 2021 list of world's most admired companies. And it received the S&P Global Platts 2020 Energy Transition Award for leadership in environmental, social, and governance. So great company, great stewardship with it, right? That's what we like to see in our dividends. So that going forward, here's a little breakdown of how the company's broken down. So from all of the power generated, we can see a good bit is in natural gas, which is very efficient as well. And it's also very environmentally friendly. Nuclear, that's only gaining that portfolio of theirs, and solar and wind, both of those are increasing. And since 2011, they've actually put in over $100 billion into their infrastructure across the United States, Canada, and the other places that it is around the world as well. So a lot of money it's invested, and it's definitely seeing a good return on all of that as it's being able to lower its cost expense as well. And so they have a lot of assets under management, 128 billion as of the end of 2020, and they've got almost 88,000 miles of transmission and distribution lines, and $18 billion in operating revenues in 2020. And they're in 49 states in the United States and in 4 provinces in Canada, and then also in underdeveloping areas around the world. So highly diverse. That's what I like to see in my dividends too. And as you can see, here's a map of just all the areas that they're in and all the different things, from wind to nuclear to solar to battery to transmission lines, everything. So this company kind of does it all. It's not just in one region. The dividends, I love this part. So the starting yield right now is 1.89%, and that payout comes to $1.54, and that's paid out, quarterly. So $1.54 divided by 4 per year currently. So not the highest starting yield, but this yield is gaining a lot of growth every year. So the last 5 years, it has grown at 13% per year. So that's an insane amount of growth. That is 13% of dividend growth year over year on the CAGR. So that is astonishing. In the last 20, it's grown over 9% in the dividend CAGR. So that's just basically saying the dividend has increased at a rate of 9% over the last 20 years, or 13% in the last 5 years each year. So that is a phenomenal growth. So I'm going to tell you guys right now, if you're trying to chase high yield, if you have a decade or more to wait, this would be a really, really good option for you, because this is going to outpace, say, a 5% yield only growing at, 5% and, in due time pretty quickly. And when it does pass it, it's going to go way past it. So always look at that dividend growth, such as this company. The payout ratio is not quite a 76. That's actually an old metric. The payout's actually closer to about 60% currently, and I'll show you on a chart coming up. And so that is quite astonishing, right? So for utility, that's about right where we want to see it. So that's not super high at 60%. And the last dividend raise was from February to March of 2021, so this year, and it was a 10% dividend raise. So that is astonishing. And then over the last 25 plus years, it has been a dividend aristocrat. So it's increased its dividend year after year, even through bad times. And it's focused on returning long-term growth and capital back to its shareholders, and also improving the efficiency of its power grid. So I like to see that in a company. It's got a really good long-term vision. And so here just reconfirms the dividend growth. So you can see the chart here going all the way back. Obviously it doesn't go, it just goes back to about 2001, but that's still a good metric. So they've had uninterrupted dividend streak for over 25 years. And as you can tell, that phenomenal growth. And courtesy of Simply Safe Dividends, I love their platform. I'm actually a member. They have ranked it a 99, which is pretty much the highest you can get for dividend safety. And that's based off of the amount on its balance sheets, its growth, its payout ratio, everything. So you can see the earnings per share, you can see the shares outstanding, total sales. These are all important metrics that you should look at when you're looking at potentially investing in this company and any company. Just to make sure that it actually has good growth and more than just meets the eye, because never chase that dividend yield, because that could lead you down a bad hole. So always look at the metrics, see the company for what it is, and make your decision. So that earnings payout ratio, like I said, guys, is about 60% if you look over here on the right, on the top. And it's projected out about 60% in the next 12 months as well. So that's great. That's not super high. They have plenty of room to keep growing that dividend. And the earnings per share has been growing at a phenomenal rate. As you can see, it's literally just been trending up. Oops. It's just been trending up over the long haul here. So all the way back to $1.10, it's all the way at $2.54 now. And we can see that the sales has been pretty steady, and it's been slowly increasing over time. And the shares outstanding have not creeped up an insane amount. So that's good. It's not getting a lot of share dilution. And so we can see that based off of these metrics, it's a good dividend and a good stock company so far. But let's take a look at one other thing that you should look at, and that's the interest coverage. So this is a metric basically based on the amount of income and operating income that the company is bringing in order for it to cover its interest payments on its debt. And utilities always have a decent amount of debt for their infrastructure, and that's very typical. They have a lot of write-offs for it, but we like to see enough cash and balance with the operating expenses and operating yield that it's bringing in to be able to cover this interest. And so we can see here about a 3 is about the middle of the road, or about where we like to see a good utility company, and we can see that they're over 5. So that is great. That is a good sign. It's like the equivalent to somebody having, a couple of years of income to cover their expenses versus somebody that only has less than a month. So a great metric, right? Now the growth on the shares themselves. Overall, this company has outperformed all other utilities in the S&P index over the last 15 years. And it's also outperformed 85% of all the S&P 500 over the last 15 years. So that includes the S&P is grouped with like the Procter & Gamble, the 3M, the Amazon, the Apple, the Microsoft, all of those companies. Obviously, I'm not saying it's outperformed Microsoft or Apple or all those, but it has outperformed 85% of all of the companies in the S&P. And the adjusted earnings growth over the last 15 years has been about 8.5% year over year. So each year, for almost 130% earnings growth over that time. So that's amazing. And so we can see it's got a great outlook for its future. Also, that stock growth over the last 10 years has been about 720%, depending on the metric you look at, for, that's about 72% a year if you break it down, right? And that's assuming dividend reinvestment. But that price per earnings is very rich right now. It's just over 50, and so it's valued really high just because buyer sentiment, believes that this is a good company, and I know it is as well. That being said, it's in my portfolio, and I plan to still keep dollar cost averaging in, which I recommend you guys as well, although I'm not a financial advisor, so don't take that as advice. But what I'm doing anyways is continually to buy in and dollar cost average in. And when the market does crash, hopefully, I'm not saying hopefully in a bad means, but it'll be good for us dividend investors when it does crash, because it will. It's always history repeats itself, right? It's a graph. It'll be even a better time to buy. It'll be like Black Friday shopping except for stocks. So if you can buy the same stock and it's producing the same amount of income for you, and you can buy it for half the share price, so you can effectively buy double the amount of shares for what you could buy yesterday, who wouldn't buy more? I mean, you'd have to be crazy not to. It's just the buyer's emotion gets into it. And so when you're buying for your portfolio and your long-term growth, you have to get rid of your emotions, because your emotions will be what wreck you when you invest. So that's a good advice as well for you guys. And that's helped me a lot along the way, because I've used to do that on emotions and it never ended well. So the price to book on this one is about just over 3.5. So that's actually just in line with the other utilities. So it's pretty good actually. And then a great metric, right? And a good thing to look at is about $100,000 investment in this company 10 years ago would be about $800,000 today with dividends reinvestment, and about just over $600,000 without. So an amazing figure. So a lot of great growth and a lot more growth to come with this company. All right. So here's a little chart with the earnings to continue, right? So $10,000 investment's almost $80,000 after the 10-year time period from 2011 to 2021, and without dividends, just over 66,000. But you can see it is literally trumped the S&P 500. So almost 700% compared to just 370-ish%, for dividends reinvested, and then 565% versus 320. So amazing amount of growth in this company, definitely way outperforming the S&P. And honestly, going forward, it's still going to do very well. All right, so where I see this company going, you guys, honestly, is I see the nuclear energy really increasing a lot. And I see, based off the new Green Deal, and the government themselves, at least in the United States, has already put in last year, they did like a $50 million research project into uranium. So obviously that's not going to be going anywhere. They are definitely interested in it. And it's with the technology increasing and being able to actually dispose of the residual byproduct of what normally happens to the uranium, in a more efficient manner where it's safer for the environment as well. I see nuclear becoming way more effective. And that is just because it's a lot more power effective when it comes to power output. So if you take, the total grid around the entire world, we're talking at there's 6,800 different power generation plants around the world, right? And there's only a couple of hundred of those that are nuclear, and the nuclear ones within a couple hundred literally produce over 10% of the entire power worldwide. So you can see that if it did all of it, it'd only take a few thousand of those compared to, multiple thousand of just traditional. So it's highly efficient, like I said before, and this company is increasing its nuclear footprint in a good way. So it's growing that safely with its research that it's putting in, and the wind and solar as well is really improving its infrastructure. And it's put in over $100 billion. So that 90 billion was actually from a few years ago estimate. It's actually over 100 billion now in its clean infrastructure that it's really built onto its power grid. And that's been in the last 10 years and even this year as well. And so when a lot of companies are trying to hold back or maybe not doing as well, this power company is set to excel. And the nice thing is with corporate taxes increasing, this company will easily be able to pass that off to the consumer, sadly, for anybody in that area, but good for the investors, just like any utility will. And so that corporate tax is not really going to affect them, you guys. So I highly recommend you guys start investing and looking at utilities for the next decade of growth and on, because there's going to be a phenomenal amount of growth in them as we look to new energy and we look to a lot more reliance on the electric grid. And so they're going to really be pushing their electric grid to the max and really improving upon the infrastructure. So it would be a no-brainer to invest in more utilities, especially good ones like this company. So also, since from 2005 to 2025, so a slightly future projection, but they're on track, they have reduced their CO2 emissions by 67% in this company, which is far more surpassed any other utility in the industry in doing that. So they are there for the long haul and also benefiting the environment as a whole. And also they are approximately 30% cheaper on average and more reliable than other utilities. And now they are the world's largest utility by sector and growth. So overall, NextEra Energy is a great company to hold in your portfolio. Highly recommend them. And, going forward, I highly recommend you guys look at utility stocks. I'm going to be posting more videos on deep analysis just like these in the near future on more utilities and also the other sectors as well. So I'm not going to give you guys any information that I'm not currently doing myself. And so I figure you might as well put, your mouth where your money is, right? And also I always recommend you guys do your own research. But if you guys have any questions, always drop them down in the comment section below. Also, if you would, please click that thumbs up. If you made it this far, I really appreciate you guys watching and all your support. And also, if you have any questions on the video, always make sure you can go back on the video and look at those price and earnings charts as well, because those are a good metric to have. And until next time, safe investing, and you guys take care.